Anthony from BlackBull Markets. Today, NFP, non-farm payrolls, the biggest economic event in your monthly calendars, and everyone's attention is on the price of gold. Of course, with that FOMC move, one of the biggest moves we've seen in quite some time, saw a big move to the downside from gold when bulls were all getting into the trade, pricing in that higher inflation expected, and of course those low interest rates really helping bulls to take up the position back over 1900 as we saw back in April and May, and then we consolidated for a while around the 1880s, 1900, looking to head higher, and that was a lot of the thoughts until Jerome Powell came out, the Federal Reserve Chair, and said we're expecting 2 rate hikes before 2023, and that of course had a resurgent demand in the US dollar. We've seen the dollar recover against key G8 currency pairs across the FX grid over the last few weeks. And that's also reflected in gold, which is interesting because this is a daily time frame, and it shows how we've now entered back into that downward channel that's been formed ever since we hit those all-time highs above $2,000 an ounce. You can see the daily chart's currently testing the top of that end channel. We can see a key support level just below it at 1755, and of course that's the mark you should be looking at for if we do get a print, either good or bad for NFP. We could see a whipsaw movement to the downside first. Well, the likelihood is that could happen as momentum has been taking gold further lower, and we could see a bit of reversal now heading into the second part of the year, getting ever so close to those interest rate hikes, and of course investors starting to price in more of a global recovery as the world comes out of the pandemic. We see technically a break of 1755 puts into play 1681, and that's your next target to the downside. There's a lot of support around that area, and of course that beautiful double bottom level was building the initial move to the upside, and that's what we saw the base come from before we've seen this move back into the channel. So first take profit target, probably looking at crossing 1755 for the base, then 1680. Heading into the next few weeks, we could see a move below all the way to 1700 today. As you know, NFP, you get 50 to 100 pip moves, whipsaws, and we could easily come back to the mean, back to the top of the channel, as we've seen on various occasions with NFP. So do keep your eyes on that technical formation on the daily chart. We skip down to the half an hour time frame. We can see what gold's been doing in a shorter time period, and that's a lot of consolidation around that baseline 1755 support level. We're now back into the consolidation area. A lot of smaller bodied candles coming up to the news event, and again, like I said, what to expect? Well, we could see something very much like that as an instant move, or we get a continuous sell to the downside. Now, in terms of the fundamental data, of course, the job recovery is pretty steady, expecting to see about 550,000 new jobs created for the month, and unemployment data to remain the same. So, not much changing in the data front. If we get a big beat for NFP, we could see a move to the downside for gold. Likewise, if we get a more than, pretty much expected change, we could see that whipsaw move as volatility kicks in, as we do see in NFP and what we all love to trade. But do trade safe, do use a stop loss if you are looking at this event, and all the best of luck. Take care.